All right. Today is Thursday, February 23rd. This is a recap for the stock market activities today. Now, folks, I got a good one for you tonight, and let's begin with this. Few disclaimers. Number one, we have a lot of crypto scammers using my name, and they're sending you links for Discord or for, hey, contact me on WhatsApp or whatever, give me your credit card number. All of them are scams. I would never reach out to you with such a thing ever. To begin with, I think that crypto is a cancer. Charlie Munger says rat poison, I'd go as far as cancer. So why would I reach out to you with some crypto scams? Use your head. Disclaimer number two, this market is becoming increasingly a battlefield. There are two conflicting views going on right now. And these two conflicting views are going at it right now in a fierce battle. This is a battlefield kind of market right now. The good news is the battle will be resolved soon. Either one side is going to win and the market is going to go higher, or the other side will win and the market is going to crash big time. In either scenario, more clarity is about to come. But in this stage of the market, you cannot afford to make major mistakes. A lot of you trade options. I have nothing against options. I do trade options too. But options can be really dangerous if you don't know what you're doing, especially in the battlefield stage in the stock market. You could wreck your account if you have no clue what you're doing. If you're buying calls randomly, if you're buying puts randomly, and you haven't defined your risk. How much risk can you tolerate? Because what's going to happen is you buy calls, the market goes down big the very next day. You buy puts, and then the market explodes higher the very next day. And you're going to end up wrecking your account. And then fast forward a few weeks from now, you're going to look at the charts and see clear skies, clear direction, up or down. And you're going to look at that little stage of the battlefield when we went back and forth, and you're going to say, oh my God, I wish I stayed out while this battle was going on until a resolution becomes clear. Now, I've been in these battlefield markets for a long time. I know how to deal with them. I know my risk, but there is no shame in admitting that you don't know how to deal with them. There is no shame in stepping back and saying, okay, I'm going to step back, wait for the resolution, and then hop back in. It is not worth it to wreck your account right now being involved in a battlefield stage of the stock market. Enough said. Disclaimer number three, I'm going to try to keep this short and sweet because I have another video that I'm working on. You might have an idea what that video is. It's about natural gas. I know what you're going to say. Hey, Maverick, you've been working on it all week. What's going on? You're never going to get it done. Actually, I have it already done. I have all the folders, all the files that I need. I just have to assemble them all together. And yes, the video will be available to the public. The plan was to make it for members only, but I'm going to have it out for the public. And then we'll do something special for the members. Maybe I'll go live on OnlyFans later on. Check your inboxes. Anyways, folks, we have a strange market right now, but things are about to become really, really interesting. We're about to have the climax of this battle. One side will win, the other will lose, and the move will be seismic. So let's talk about it, and here it is, in focus tonight. Strange things. Weird things are happening, folks, and usually that precedes a massive move. To begin with, market participants lost their minds. There is no reason, there is no rationale going on right now at all. This monkey rally is now entering an extremely dangerous phase. Either the pre-assumptions behind this rally will be proven right, or there is a massive reckoning coming. Look at what's going on around you. What stock led the market higher today? The answer is NVDA, up double digits. Was it really justified to begin with when the stock is up almost 100% year to date, when you have revenues down 21% year on year, profits down 52% year on year, every single segment of the business is down year on year. But hey, it's all about AI. All what the CEO had to do is just say the buzzword over and over and over again. AI, AI, AI. And that's all what the mom and pop investors want to hear. They want to chase the hype, and the CEO delivered. But does the CEO really believe in the hype, or is he just another predator pumping and dumping? Because if he did believe in his company, why did he sell hundreds of millions of dollars at the top right before the crash? My hunch, he's selling right now. But it's not just the AI hype. It is the IPO mania coming back. It is the SPAC mania. Remember SPACs? We now know, everybody now knows, everybody rational, I should say, now knows that SPACs are scams. Yet we have the retail mom and pops stampeding right into the slaughter once again. What's going on here? We're seeing strange things that we haven't seen in a long time. This is the 5 minutes chart of the SPX, the cash index. This is a major major index, the S&P 500. It gapped higher midday, intraday, massive gap above the important resistance line of 4,000. This is not natural, folks. This is manufactured. And I have a feeling that they're luring all the mom and pops in to do what? To close the trap door. To begin with, look at this indicator. This is the put to calls ratio. When the chart goes down, it means that calls are outweighing puts. And when the chart in blue goes higher, it means that puts are outweighing calls. And then the chart in black is the SPX, the cash index of the S&P 500. And the bottom line from this chart is, we see insane stampede in buying calls, for example, when things get tilted one way or the other to the extremes, it means that the market will do the opposite move every single time since the beginning of the bear market. Every single time the put to call ratio reach these extremes, meaning we have a stampede on call options, we have a revival of the mania, the S&P 500 pulled down in a meaningful way. Now, this is the highest call options volume in history. We have the biggest stampede in history. The retail mom and pops are pumping $1.5 billion per day to buy stocks, to buy call options. In other words, if this trend holds, we're about to see one of the biggest pullbacks we have ever seen so far in this cycle. Could it be different this time around? Sure. You can believe that if you want. Could it be different this time around, that the sun is going to rise from the west instead of the east? Could be. But what are the possibilities? Because Wall Street's elite investors are now privately warning that the stock market is headed for another scary plunge. A big one is coming. And folks, the macro data is not looking good either. Today we got the news across the Atlantic from the Eurozone, and inflation in the month of January topped earlier estimates, meaning the tamed numbers of inflation that gave you the impression that we have a disinflation process in the economy, and maybe we have a soft landing. All of these numbers were cooked. All of these numbers were manufactured to achieve something. And now that it's too late, they're giving us the information that, oh, whoops, we made a mistake, folks. Turns out inflation is actually higher than we told you before. And core inflation in the European Union is now making a new high, which means that Madame Lagarde will have to up the ante. 50 basis points, not going to make it. Now she has to go to 75 basis points. But I know Chancellor Scholz from Germany, he keeps telling me that the recession is not going to happen and the soft landing in the German economy will happen instead. And I should buy the DAX right now at almost all-time highs when the country of Germany burned billions of dollars overpaying for natural gas. You think there is no price to pay here? Think again. And the same phenomenon took place here in the US. We woke up in the morning today and we got a revision. Turns out the regime's data, they're all cooked. US economic growth in the fourth quarter was weaker than previously estimated, reflecting a downward revision to consumer spending. Whoops. All the talking heads on TV talk about, oh, the consumer is so resilient. The most overused word. What resilient? What the are you people talking about? Credit card debt is skyrocketing right now. Why do you think the consumer is resorting to using credit cards? They got no money. That's resilient? But here's the catch, folks. While there was a revision in consumer spending, a downward revision for real GDP from 2.9 to 2.7, inflation was revised higher. The PCE price index went higher from 3.2 to 3.7%, excluding food and energy, went higher from 3.9% to 4.3%. Now, the tinfoil hat theory goes as, oh, they revised all of these numbers higher because tomorrow we have PCE inflation data. And it's going to be hot. It's going to be shocking, especially if you look at it month over month. So if PCE comes out tomorrow at 4%, for example, when you pin it against 3.2%, that is shocking month over month. But when you pin it against 3.7, oh, we're not having a massive revival of inflation. Maybe that's what they're doing right now. Who can believe any piece of data that comes out of the regime right now? Nothing. They lie about everything. And here it is once again. GDP revised down while inflation revised higher. And this could be a major mistake by the Fed. When imbecile Jerome Powell went down from 50 basis points to 25 and said disinflation 11 times. Even Jamie Dimon from the Landromat now says that the Federal Reserve has lost a little bit of control over inflation. And he's being modest here when he says a little bit. It's actually a lot. We are now reaching a disaster zone, ladies and gentlemen. The government is paying over $200 billion in interest payments alone. Consumer credit card debt. We're only talking about credit card debt. We're not talking about mortgages. We're not talking about student loans. We're not talking about anything else. Auto loans, that's the one that's about to blow up. But we're just talking about credit card loans now. Americans have racked up over $1 trillion in credit card debt. Now, the average rate on a credit card is around 20% and climbing higher, the highest rate since the 1980s, which means that Americans will now have to shell over $2 $200 billion in interest payments alone per year, as much as the government is paying. And you telling me that this is the best economy, Jack? What are you talking about? And of course, Jamie Dimon, when he talks, I think this motherfucker knows something, because every time he comes on TV, he says, "Oh, jobs are plentiful, savings accounts are plentiful, but when you look ahead, there's something coming." He keeps saying this over and over and over again, but he's not being specific. He talks about a hurricane. He talks about something coming. He's seeing something in the data, but he doesn't want us to panic. He knows something, and it's not good. And he now says that there is scary stuff about to happen in the economy. And I say, wow, that's specific. Scary stuff. What is it? Just say it. Let us know. People need to know, because they're going insane. They're gambling in the stock market again. They're buying SPACs. This is going to end in tears, folks. Anyhow, let's move on to the stock market and see what's going on here. And we begin with the closing of the indices today. And here we go. It was a roller coaster day today. The Dow Jones was up, then it was down, then up again. Be it that, it finished positive by 108.82 points, or a gain of 0.33%. The Nasdaq led the gain with 83.33 points, or a gain of 0.72%. The S&P also positive by 21.27 points, or a gain of 0.53%. When we look at the sectors, at number 1, capturing the gold medal, energy. Number 2 for the silver, technology. Number 3 for the bronze, real estate. And the laggards, communication services, utilities, and materials. A weird mix, doesn't make sense at all, but today was a strange action all in all. The unexplainable. When we look at the breadth, all in all, neutral, with the NYC at 63% advancing versus 35% declining. The Nasdaq 52% advancing versus 44% declining. When we talk about commodities, the dollar was up, then down, then up again, then down again, all over the place. And we have mixed signals here. On one hand, metals say that the dollar is about to move higher again. Gold down, silver down, platinum down. Most importantly, copper down by more than 3.25%. Palladium was down by almost 3%. Grains were down. Corn, rough rice, soybean oil, soybeans, all down for the day, indicating that the dollar is about to move higher again. On the other hand, we do have energy commodities moving higher. But over the weekend, in my oil analysis video, I talked about the tailwinds for oil. And sometimes these tailwinds are really strong, to the point where they overshadow any pop in the dollar. Not a major pop, but let's say upside days, when the dollar is up south of 1%. But if it is up more than 1%, it'll be really hard to see energy withstanding the storm here. Of course, today the WTI and Brent all closing positive, with gains of almost 2.25% apiece. So did the gasoline RBOB. Heating oil futures were muted, but natural gas, the party boy's back, closing with gains north of 7%. We're going to talk about natural gas in details in the upcoming video, but we're also having weird weather all over the place in this country. The weather in the east and south is warmer than usual. The weather in the west and the north is colder than usual. We have a 100 degrees gap. Unbelievable. More than 800,000 homes and businesses across the upper Midwest were in the dark after dangerous ice storm coated roads and knocked down power lines. And believe it or not, here in Southern California, we even got a blizzard in the mountains in LA. The weather is all over the place, and of course in California, folks are paying an arm and a leg for these gas bills. The reason is the Henry Hub that you see on the screen right now, that comes from Louisiana, the South, and mostly it tracks exports. But we do have different futures here in California in the West. The North have their own, and these futures prices are way higher than the Henry Hub. So when you hear the talking heads on TV saying, oh, inflation is going down because natural gas futures went down big, that is one indicator, one region, and it tracks exports for the most part. But what folks are paying in real life, in cash prices in California, in Texas, in New York, these prices are going higher and higher and higher. So be careful assuming that we have disinflation because, oh, nat gas futures went down. That means nothing. On to the big casino, the options market. What do we see here? The volume all in all went higher, and we're seeing buying of puts starting to creep back in. Beat with that at number 1, the souffle Tesla with around 2.4 million contracts traded today. About 59% of those were calls. And at number 2, NVDA with around 1.9 million contracts traded today. About 52% of those were puts. Now hold your horses buying puts against NVIDIA. I'll talk about it in a minute, but at number 3, AMC with around 1 million contracts traded today, although puts outweighing calls with about 62% of the volume. Now here's NVIDIA. Yesterday we talked about the importance of 220, 230. But in the morning, the name was trading way above these numbers. So we had to identify a new target, and I showed you that in the morning brief. The number was 231.19, which NVIDIA managed to climb that number as support and retested over and over and over throughout the day. Now 230 and 220 will become more important in tomorrow's activities in the week to come, but why did NVIDIA gap significantly higher? The answer, once again, mechanical reasons. And this is the same phenomenon, by the way, that happened with Meta after earnings. And Meta stalled. It didn't go down right away. And maybe NVIDIA will do the same thing. Yesterday, the hottest contract was, when it comes to the open interest, was 220. Now, the holders of this contract, 220, rolled up to 230, 240, and we started to see the open interest for these calls moving higher and higher and higher. And with that, NVIDIA's share price. On the other hand, when it comes to puts, crickets, nothing. Matter of fact, put options holders closed their contracts and they did not roll down or out to anything at all, meaning they did not buy the 220 puts. They did not go all the way to March, for example. And therefore, the feedback that the market maker received today is, higher we go. There was no resistance. As a matter of fact, if we look at next week's options, the call options, we saw a lot of demand for the 250, an increase in open interest and also volume. But here's what the market maker is going to do. We have expiration tomorrow. The highest open interest is for 240, which is out of the money right now, but then we have 230 and 220. And therefore, I say 230, 220 will become more important in tomorrow's activities because the dealer wants the majority of these contracts to expire worthless. Now, can they push it all the way down below 220? That is a possibility. That's what they're going to aim to do. Is it going to happen? That depends if we have more buying of call options, be it with the expiration date of tomorrow out of the money or for next week. The dealer is going to look at the flow in real time and make these assessments right away, whether to dump this week or hold on, push it a little higher and then dump next week. In the meantime, we haven't seen a lot of activities when it comes to puts. We haven't seen buying of puts in next week's expiration, for example, or March 17th expiration. Now, if we start to see these positions building up, then we have an indicator that NVIDIA might pull back and lose some support. But for now, we don't have these indicators yet. All what we have is perhaps the dealer is going to push NVIDIA below 230 or 220 by tomorrow. But that's it. That's all the information that we have. On to the unusual activities that took place in the options market today. We begin with the ticker ARKKKK for Tesla witch Cathie Wood. Now, I've been shorting Tesla witch since 21, and I also have put options, so this is a good one too. Somebody bought the 36 puts for the expiration date, April 21st, with expectations that Mama Cathie Wood will go down by more than 9% by the expiration date. They paid around $1.90 a piece, tenor. This trade, all in all, spending around $6 million. And then what about the ticker W for Wayfair? Now, the name was down big based on earnings, and somebody's betting for more pain to come. They bought the 35 puts for the expiration date, April 21st, with expectations that Wayfair will go down and lose more than 8.5% of its value by then. They paid around $3.55 a piece, tenor. This trade, all in all, spending around $4.2 million. And then, this is quite an unusual one. Maybe somebody knows something here. For the ticker DIS for Disney. Somebody bought the 110 calls for the expiration date, May 19th, with expectations that Disney will move higher and gain more than 8% by the expiration date. They paid around $3.35 a piece to enter. This trade, all in all, spending around $3.3 million. And then what about the put spread for the ticker BX Blackstone? I happen to be short the name and somebody agrees with me here. They're jumping in by using a put spread. They bought the 85 and they sold the 75 puts, all for the expiration date, March 31st, with expectations that Blackstone will go down and lose more than 6.5% of its value by then, but not more than 17.5%. They paid around $2 a piece for the 85 puts and they received in credit about 60 cents a piece from selling the 75. All in all, the entry cost is $1.4 a piece, and the profit potential is $10 a piece, so not a bad trade here. And all in all, they spent around $1 million. Now, last but not least, what about the ticker VXX? This is quite an unusual one because somebody's betting on volatility to move higher. Every time we see these trades for the high levered indices, somebody knows something. So somebody's betting that the VIX is about to explode. They bought the 12.5 calls for the expiration date, date, March 31st, with expectations that the VXX will move higher and gain more than 6% by the expiration date. They paid around 80 cents a piece to enter this trade, all in all, spending around $500,000. On to the heat map. What do we see here? We don't have a theme one way or the other, but we have the obvious. The name trading higher, semiconductors on the heels of NVIDIA's earnings, AI optimism. Microsoft outperformed today based on this AI hype. We also have some of the industrials rebounding higher, led by railroads and UPS. Boeing was positive too, but after the bell went down based on rumors, we don't have the confirmation yet that they're stopping some of the production for whatever reason. Doesn't matter. Boeing was down after hours. And of course, leading the outperformers, oil and gas. When we look at refiners, for example, MPC, this is Marathon, up big. LNG, we talked about Cheniere last night. We didn't get the drop. Unfortunately, LNG Cheniere goes higher without me. But the good news is I have some names here in the energy cohort that moved higher, such as SLB. We talked about MPC, Marathon, Valero, Coterra, and natural gas was up big today. EQT was up today. So we're seeing more natural gas names outperforming the big oil names. Now the laggards, we have weakness in some of the stores led by Dollar General based on earnings. We also have the fast food down based on Domino's Pizza. Now what happened with Domino's? Here it is. Both Domino's and Papa John's down big because they say deliveries were soft. A lot of folks are choosing to go pick up their pizza rather than paying delivery, which a lot of the margins for these businesses come from deliveries. Now I've been waiting to buy Domino's Pizza because it is one of my recession picks. Is it cheaper now? Yeah, but I'd like to see it going down even more. Now, Domino's Pizza was my best investment ever. I bought it back in 2009 for about $5 a share, and I got rid of it around 2019, I believe. Best investment ever. And back then in 2009, folks said, "Are you crazy? You're buying Domino's Pizza? That store is going to go bankrupt, dude." But I kept going to the stores and say, "Hey, the new pizza by Domino's, it's actually catching a bit. A lot of folks are liking the new pizza." And I used to live in Oregon at the time, and I used to go to the stores, Domino's Pizza stores, and I say, "How are the sales? Are you seeing people buying? What is your demand?" etc., etc. And the store owners would tell me, "We're seeing a spike in demand. A lot of people like the new recipe." And I'd go to pizza stores from Portland, Eugene, Salem, Ashland, and I would ask the store owners, "What are you seeing?" And I noticed that Domino's Pizza was pulling away demand from other pizza stores. And this is why I bought the stock. It was my best investment ever, but it's down big today. Is it an opportunity to buy right now? I think we should wait for it for a little bit. And then we have GM down based on bad truck sales numbers, or production I should say. But the most interesting action is from Alibaba, which popped higher after earnings and then lost all of the gains. Interesting action. The communication names were down, T-Mobile, Verizon, but Netflix was a loser today, and the reason is they're cracking down on password sharing, but they're also lowering the membership price for certain regions where they have low demand to begin with. Of course, the market doesn't like this kind of news. It smells like Netflix is facing some troubles here, and therefore they're resorting to lower prices. We'll see what happens. But the reaction was negative. Netflix was down about 4% or so. Now, here are some other major movers. Let's talk about AMC. We'll cover the chart of AMC because I talked about it in my morning brief. But now we have the apes, the shareholders of AMC, suing the company over the whole gimmick about adding shares and diluting the value of AMC by using ape. We talked about this in this channel. We said it's a gimmick. We said that the silverback is stealing your money, but the apes would not listen, so who cares? And then we have Google, a company that we love and adore, and we will never short. Google is tightening the belt because they have a lot of problems. We have the CEO of YouTube stepping down. They're not paying a lot of money. Well, a lot of you say, "Hey, Maverick, what's up with the ads? Lots of ads." Well, skip the ads, you fool. I actually don't get paid by the ads. You have to click on the ads, then close them, then that counts. But you might notice that a lot of your favorite YouTubers are actually using more ads now because the money's down. More problems for the company here. And now they're resorting to sharing desks at the office. You don't get your own cubicle here. Maybe have a bar table and a bunch of stools. That'll solve the problem, right? Efficiency. It's all about efficiency. That's another buzzword. And if we're going to talk about efficiency, how about this kind of efficiency when you go to the Nike store and you rob the whole joint? Well, now Nike's facing a wave of retail crime all over the country. Nice country we live in, right? Crime all over the place, homelessness all over the place, mental illness all over the place, housing prices out of whack. But somehow we're sending $100 billion to Ukraine. What's going on here? And speaking of Ukraine and fighter jets and all of that, here's some sad news for you. All of you Top Gun Maverick fans. Well, the FA-18 Super Hornets, they're gone now. They're going to retire in 25. So goodbye. A legend retiring. Till next time. Maybe we can use them to shoot these balloons all over the place instead of using the Raptors, spending $1 billion a pop to shoot damn balloons. Anyways, let's move on to the heat map for the ETFs. And again, the dollar was up, then down, then up, then down, so there is no guideline here. All in all, the action was positive, led by growth outperforming value, be it energy outperforming the XLE, XOP specifically, OIH, along with chips, of course, SMH, based on NVIDIA's earnings, or lack thereof, whatever hype they're doing right now. Besides that, no notable action here, besides, of course, your boy BOIL for nat gas, to the moon, bruh, up about 12.5%, and then UNG up about 6.5%. But I'm not going to jinx it. I'm not going to brag about it. Just leave it alone. Don't talk about it. And it's going to go higher and higher and higher. That's the secret. The moment you start bragging about it, it's going to go down. Anyways, let's do some charts here and then wrap it up when we begin with the SPY, the S&P 500. What's going on here? We now have what it appears to be a descending channel. And notice that every single time, we lose 398, the most important support, which is the equivalent of 4,000 in the SPX, the cash index. We get a rescue operation out of nowhere, just pumping higher. The good news, if you're chasing these rescue operations, at least from a short-term perspective, the RSI is firming up along with the MACD, indicating that there is a possibility the chart could give it a shot at 405. But again, it all depends on the PCE and core PCE. If that comes out hot, the SPY is not going to make it. It's going to break below 398. Let's look at the daily. What's going on here? Nothing at all. Within range, a little higher, but still below 4,037. The volume is at around average. The RSI is negative divergence. The MACD indicator is in negative momentum territory, so all indicators say more downside to come. And maybe this is a beginning of a bear flag consolidation pattern. To erase this possibility, the bulls must close the week above 4,100. Long shot, but if the PCE comes out cool for whatever reason, doesn't make sense, but can you trust the data anymore? But if they close above 4,100, then the bulls are back in charge. Absent of that, I think you can see it. I don't have to point it out for you. It looks as the beginning of a head and shoulder formation, in which a closing below 3,960 will seal the deal that the bears are now in charge. And we're talking about cocaine bears this time around. The crazy, the shorting all in. What about the Qs? 30 minutes chart. What's going on here? We have what it appears to be a triple bottom for now. Every time we break below the important number, 294.33, some mysterious intervention happens, and the chart closes above the number for some reason. But anyways, a weekly closing below 300 means the bears are still in charge. A closing above 300 for the week means the bulls are alive and back in charge. Here's the NASDAQ continuous contract, the daily chart. What do we see here? We have the megaphone descending channel. The bulls would look at this as a bull flag consolidation channel. Everybody has their own biases, but we have to confirm with the momentum indicators. When we do that, you got a negative divergence in the RSI. The MACD indicator remains in negative momentum. So you can't look at it as a bull flag pattern. You have to look at it as a descending megaphone pattern. But the most important number here is 12,207. Closing above means the bulls still alive. Closing below for the week means the bears are back in charge. IWM, what's going on here? 30 minutes chart, similar look with the Qs, the triple bottom look. Every time we go below the important number of 188, something happens and it pops above it again. But there is another way to look at it, which is if we clean it up and we use a line chart instead, isn't this looking like a head and shoulder formation? And therefore I say this is a battlefield kind of market. The bulls have their own theories and they're still valid. The bears have their own biases and their own theories and they're also valid. And it's going to depend on the slew of macroeconomic data, the Fed, to seal the deal. And then of course comes corporate earnings, but that's going to happen in Q2. The Dixie, the dollar index, what's going on here? Waiting and waiting for the PCE. If the PCE comes out hot, we're going to see the massive pop higher. PCE comes out cool, you actually might see the dollar moving down. But for now, all indicators are saying the pop will be to the upside. Maybe the old man gold can shed some light here. Not really. The old man lost support at 1,842 and now we're looking at 1,763. Nothing new here. What about Brent oil, daily chart? We have a break below the trend line and now we have an upside day. Can we make it above the trend line again? I know a lot of you say, hey Maverick, your line is not it's not right here. You might want to move it down and it looks like this, and we still have the trend going on. Doesn't matter how you look at it, because there is another another way, which goes as, what if this is a head and shoulder formation? And down we go. Therefore, oil bulls must hope for a higher high in the pattern. And that's not going to happen until Brent oil closes above 90. To be specific, at around 87. That's a long shot from here. Now, what about the 10-year yield? We have a pullback today. And honestly, if you're betting that the PCE inflation rate will come out hot and we will see a major pop in the 10-year, this is exactly what you want to see. You want to see the market rallying ahead of the PCE reading. You want to see yields pulling back. You want to see the dollar pulling back because it becomes the element of surprise. The PCE comes out hot. We see the market going down big and the 10-year popping higher big along with the dollar. And therefore, I say there's a lot of arrogance here in pumping the market higher ahead of the PCE. Either either it leaked and you know what the data is going to look like, and that merits buying the Qs and the SPY and perhaps the riskiest names and dumping the dollar in the 10-year. But if you don't know that for sure, you're assuming a lot of risk here. Here's the 2-year. What's going on here? The momentum is slowing, but it is waiting and waiting for core PCE to come out. If it comes out hot, we will see the pop all the way to 4.88. If not, it's going to pull back, which means that the TLT could be moving higher all the way back to 103.5 if PCE comes out cool. But for now, we have no indicator that that will be the case because the RSI is still in negative divergence. The MACD is still showing negative momentum. The assumption should be that PCE will push the 10-year all the way back to 4 and TLT down. But again, it's all about the macro data. I don't have any information right now. What about the VIX 4-hour chart? What do we see here? We talked about a pullback, filling the gap. This is exactly what happened today. And then forming the ABC pattern. And the next leg takes us all the way back to 24.29. But that is contingent on what? On core PCE coming out hot. What about Apple, the big kahuna? 30 minutes chart. What do we see here? It made a lower low. It made a U pattern. I don't know what that is. It's absolutely weird, but it continues to bump against 150 because this is the most important number. A weekly closing below means Apple is toast. The bears will take it down all the way to 145, if not below that. Now, if it closes the week above 150, then the bulls are back in charge. And they're going to take us all the way to closing the gap at around 153.69. But we talked about the daily chart, folks. The pattern, the trend is clear. Apple should go down. Could it be different this time around? Sure. But it is against the trend. Tesla, 30 minutes. What do we see here? It reclimbed the trend line for a moment and then it fell down again. The good news for the bulls is it closed above 200, so it could give it another shot in climbing the trend line again. The problem is, while it made a higher high, good sign for the bulls, bad sign is maybe forming a bear flag pattern. And down it goes tomorrow. But the bulls will argue again, this is a higher low. We have a new trend line, a minor one. And you can't say that this is toast until we lose 200 as support. And then we lose the trend line and close below both by the end of the week. Tulips, Bitcoin, what do we see here? Again, I am skeptical. And I could be wrong, by the way. So just keep that in mind. But what I see right now with the RSI and negative divergence, with the dollar moving higher, with the MACD indicator curling down, about to cross and produce negative impressions in the histogram, you put 2 and 2 together, we're going to go down, or we're going to lose 23,189. Could the PCE inflation rate push us from risk on to risk off? If that is the case, then Bitcoin goes down. And here it is, AMC apes. This is an hourly chart, and I did share this in the morning. I said, could this be a reverse ABC pattern? We lose 6.9 cents. Maybe. And maybe the ABC pattern did take place because AMC broke the line and made a lower low, but it caught a bid later on in the day and it made a lower high. So now we have negative divergence on the RSI. We have negative momentum on the MACD indicator. And this could be a channel, once again, a descending, sloping channel. And if AMC doesn't have the energy to move higher, to make a higher high by tomorrow, then we could go down all the way to the lower end of the channel. And that would be a downside of about 7% from this point on. Lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? It will be an important day, no doubt about it, because we have PCE inflation, then we have new home sales, we have consumer sentiment, and then we have a bunch of Fed zombies speaking. Of course, they're going to be asked about PCE inflation. Among them, Governor Jefferson, Loretta Mister from Cleveland, and then we have from St. Louis, James Bullard. This will be the most important one to watch. And then we got from Boston, Susan Collins, along with Governor Waller. So a lot of opinions, a lot of direction here based on the PCE inflation reading. A lot of action about to happen tomorrow. A decisive day, no doubt about it. Somebody will leave the week losing. Is it going to be the end of the war? Perhaps. Maybe the beginning of the end of the war. Let's put it that way. With that, folks, this is all I got for you for tonight. Thank you for listening. Thank you for watching. And I will talk to you again over the weekend. Good night.
Fasten your seatbelts. It's going to be a bumpy night.